Hi, hey, this is Kenn Renner, real estate broker here in Austin, Texas, serving all Central Texas service area from Waco all the way through to San Antonio. And I'm here with my friend Ram Gubbala from We Are Share Coaching Network in real estate, actually the top coaching network in the United States. And we've been connecting up with being able to help investors invest in positive cash flow, appreciating properties in amazing areas at really reasonable low prices. And with high rents. And so we've been having a conversation here, and Ram said that he had some clients that would be interested in taking advantage of some of the opportunities that we have here in Central Texas, and we're going to go over some of that. But first, I want to just go ahead and introduce Ram. Ram, this we've talked several times, and you're part of the Tom Ferry Network, and yeah, I guess you've been in Frisco for a while. How long have you been there?
Yeah, Ken, thank you. I've been in Frisco for about 8 years. I lived in Kansas and Massachusetts before. I have a network of people from all over US, and I have clients locally, all high-tech clients, most of them,
Yeah.
who are looking for opportunities. That makes me, think about you, having a person like you with like lots of experience in investing. I heard you on the Tom Ferry conferences and stuff like that. So that's how we are connected. I attended one of your webinars, and now I have people who are looking for opportunities. That's how we ended up here.
Okay, well, thank you so much. And you've been in the business for 18 years. So were you in tech at all along the way?
Yeah, I started with tech only. What else? I still do some part of tech,
Yeah,
real estate.
yeah, cool. Well, the funny thing is that there's only a small percentage of real estate brokers that actually specialize in investment property. But 30% of the market is, and believe it or not, single family investment market is investors. And most of those are smaller time investors, people buying three, five, seven, 10 properties. So our strategy here with what I do here in the Central Texas region is to buy well-priced properties with low vacancy and good rent to price ratios, low taxes, and low interest rates. And we're going to kind of cover some of that real quick. Yeah, I want to give them opportunity, a little background on me. I'm 61. I got my license when I was first licensed in real estate when I was 19. And I've been in the real estate now for 42 years, 32 here in Central Texas. I came here as an investor in the late 80s, fell in love with the area, and ended up moving here and getting married in 93 and moved here. And then I started building a portfolio of properties. And even before I got here, I was from California, and we started building a portfolio. And then my wife said, "Well, maybe we should help other people build their portfolio of properties." My father-in-law owns 17 properties, mostly of them free clear now because he's getting up there in age. And so I just watched his example, and I'm like, okay, this is a strategy to not only help build wealth, augment a retirement, and also leave a legacy. And there's some really good advantages to leaving a legacy through real estate. So I've got lots of educational material on what I do. And I've got some very podcasts going back many years that are all geared towards exactly what somebody who is an investor would like to know about. It's all educational. It's all free. Yes, we get paid a commission, but the builders and the sellers, we make sure that they take care of us. You don't really all this the education and the coaching is basically part of our services. And so Ram was curious, like, well, what about all my people locally or even their network back in California? How do we get them interested and feel safe that real estate is a good investment? And so we like to address those concerns. First of all, I mean, hard assets right now, especially with the volatility in markets, not a bad idea to move some of that equity into more solid assets, diversified away from equities, away from stock market and all that. Not that, I know everybody's done very, very well with their tech stock, but we don't see 10 and 20% swings in one week on real estate. That's more of a slow moving ship. That's what's predictable about it, the trends on values and things like that. But we're a buy and hold strategist. We're not a fixer flipper. We're not a syndication. Each one of these are single family homes that my clients can buy, or Ram, your clients can buy, invest in, and or if they want a bigger scale, they can buy 10. And we've done that, and I've done many sales where we bought 9 or 10 houses with one individual, and we did it tax deferred from their properties and their property they have in California. What I really kind of focus on is the right properties in the right area at the right tax rate with the right management in place with the right leasing strategy and the low interest rate. And I'm going to kind of share. I'll share my usual deep dive email that I would send to you and kind of go over some of the stuff, and we'll also go into some of the different areas on the map where we're investing. So let me go ahead and pull that up because that's something I would be sharing with you.
Yeah,
Um,
that will be really helpful for them to understand. But those are the questions they ask a lot.
right. So let's talk about the questions before let me get back into let me unshare. We talked about this before we jumped on the podcast or the call here. Is that the no, I've been doing presentations for years and years, decades now, and so I did a survey at every presentation with what are your top concerns about buying a property that's not local, 1,500 miles away? What are your top concerns about that? And the number one was I don't want a vacant property. And so we talked about how we augment the leasing to get these properties rented as soon as possible. It's part of our business plan, it's part of our business model because our clients are very well connected, and so they're very well networked. There are a lot of family members they experience a good experience with me. They're going to tell their two friends and their two cousins, and that's how we build our business. But first of all they're going to test it first. If it works, then they're going to build a network. So I hammered into my leasing agents. We have to get these properties rented with good tenants as soon as possible. They don't have a whole lot of budget to spend on it, so I augment their budget. I give them I pay them to sit open houses for we do bandit signs, we do Facebook marketing, organic and paid. We do direct marketing to the apartment complexes. Leasing agents and property managers don't have that budget, but I do because if I get it leased, then I get their two cousins, their brothers. So that's part of the business plan. Second thing is they don't want to buy in a bad area or oversaturated with rental area, and so that's another concern is location. They want something they could sell it sometime down the road. They want something that's rentable, and they don't want the hassles. And then the third one that they're concerned about most like is trust. Who can they trust? And so I built a network since 2020. I've sold 500, just under 500 single family homes, mostly to investors, mostly virtually because we couldn't get on a plane. And so that's over $120 million in sales. Almost all investors and almost all from investors from out of town. And so that's kind of but I couldn't do that with a small team that I have without having networks of help. I call them concentric circles. So you have your mentors, your guides, your coaches, your brokers that know the investment. And that's another important thing is a lot of realtors, brokers, they don't specialize in investment property. They don't know how to talk 1031 tax deferred exchanges, or they don't understand, or worse yet, they don't own investment property. So they're not involved in it. They don't roll up their sleeves. They don't get it. So I'm an investor. I own over 13 properties, and so that's kind of what my mode is to educate our clients that you need the specialist, you need the insurance guy that specializes in that, you need the mortgage company that specializes in you need the attorney that can drop that's a real estate attorney, you need your CPA that's a tax CPA that knows taxes, especially if you're dealing from California taxes. So I help with a lot of tax strategies. I'm not a tax advisor. I don't give tax advice, but I help with the strategies to give them the right questions to ask, because that's another big concern, not only transferring assets to higher appreciating areas, but also to avoid issues with Uncle Sam, the state of California, the state of New York, to make sure that we're leveraging that we're not paying more than our fair share of taxes, right? And real estate is a great way to do that. I do a whole thing on the tax rules. Couple resources I'll send is I do have a podcast. You can see it at Kenn's Radio. It's Kenn SRADIO, kensradio.com. That's just a series of playlists of all my podcasts going back talking about exactly what we're talking now. So let me go back to the share. All right. So we're just talking about where are the opportunities. And let me go back to my this is the email. Once I have a relationship with a particular client, after we've built a connection, whether by phone or by Zoom or in person, then I go into a lot more detail because I can find out what their why is and where they're at and all that. But then this is the opportunity. And so what I have here is we found we work with one of the biggest builders in the United States. We work with all the builders, but there's only a few builders that have the combination of all the great things that you and I talked about, Ram, that make this investment possibility a good opportunity. And our builder of choice is Lennar Homes. They're the second largest builder in the United States. They're also the largest builder in this metro. And here's the reason why. And when you have the combination, first of all, they have the land position in all the area. They have over 40 subdivisions to choose from in our target area. They have the lowest prices for brand new construction. We have tax rates that are half of some of the areas that we've looked at in other areas. They're also, this is the kicker, and actually my email is a little wrong because it didn't match up, but they have interest rates, 30-year fixed interest rates to investors for 5.5 or 5, depending on FICO score, 5.25% interest rate, 30-year fixed. They also pay 2 points on top of that. So not only they give you a no point 5.25% interest rate, they give you 2% to pay towards closing costs, which is the max that a seller can actually pay. And then we find the right properties in the right areas. We don't go too big on the size of the home. We don't go too small on the size of the home. We have very specific plans that we like. Tried and true, done hundreds of them. We know what not to do. Don't want too big. Don't want a 2,500 square foot rental unless it's for an equity play. And we don't want a 1,000 square foot two bedroom. It's not. So we usually stick between 13 and 17, 1,800 square foot, bread and butter, not affordable. I hate to use that because people, it's a connotation, but entry level housing. People that they renting these homes to coming out of duplexes, apartments. They're starting a family. Maybe they got a pet now that, or kid they don't want to be in the apartment anymore. And they're gravitating to these where they can rent a house for between $1,500 and $1,800 a month for the same rent as a two-bedroom apartment. So we've got the product, but now there's so much to choose from between 40 subdivisions. Where do we throw the dart? And that's where I specialize in. These are some instructions when people get a little bit further along about how to go into the property. And I'll kind of quickly do that, talk about that, Ram.
Yep.
So the process is once you decide that it's something that makes sense. Of course, in that email I show you, I'm going to go back to it. I show you a performance. I show you the market analysis. I've got videos. I've got PBS specials and all that kind of more information than you really need. But the process is this. Once you decided this is something you want to get involved with, we get you pre-approved with the builder's lender because they won't go to contract without a pre-approval. The pre-approval is usually with their lender because that's where they offer the 5.25. No one else is going to give you the 5.25 at 0 points. It's just not going to happen. And then with our help, with Ram's, mine, and Kimberly, our on-site agents, and my team, we pick a property. We pick the best property. We will send plats. If some people are directionally concerned, we go over that. So we just make sure that the property is right. We videotape. My assistant's actually down there today doing walkthroughs, so she'll go look at the inventory that's available, take pictures and videos. So we have actually boots on the ground there. Once we pick the property, you're going to go to contract. It's done by DocuSign. Sign the contract, and then wire the money to the earnest money to the title company, to the builder, and then it's off the market. And the reason I'm giving you those 4 steps because the property's not off the market until the money is actually wired and received by the builder. Otherwise, anybody else across the metro can sell that house out from under you. And that's why, because the good deals are happening towards fiscal quarter and fiscal year ends. Fiscal year end for Lennar is November 30th. So fiscal quarter, second quarter is going to be May 30th. We're right at the time here, early April, where this is a great time to start watching how they will start dropping their prices as they get closer to being able to make their fiscal numbers. The homes that can close before May 30th are going to have deeper and deeper discounts as the weeks go along, as the homes are completed or finished. And I'm going to show you that we have a matrix that my on-site agent puts together for us that shows us. I'll show you how these discount works. Lennar is the only one that does this. They have an algorithm, and we can't figure it out. But I've been figured out enough to know, after years of going through this, is that if you can get them, you can really get a really good deal towards fiscal. We sold a house last quarter, fiscal at 188 for a 3 bedroom, 2 bath, a brand new construction. So let me go back and share. So in this um, in this, there's articles, my webinars, podcasts, PBS special, me driving through the neighborhoods that we like, actually going into actual homes, do's and don'ts with me talking to Kimberly. That's a really good one to watch. And then here's my a scheduler that you can schedule in a call with me and my phone number. And then here's what you're going to be looking at. This is a typical example. This is the pro forma that we would provide. This one is a $202,000 for 1354 square foot house. This is actually based on a house that's closing today. And 1525 rent. That'll probably be more like 1650 in the summertime. So 2.1 tax rate, not bad at all. We have tax rates as low as 1.4. We're looking at a cap rate of just under 5% for new construction. That is really hard to find anywhere in the nation. And then we have a positive cash flow, not getting rich off the positive cash flow, but at least definitely not going negative. We have some of these properties, depending on when you get them, price wise, that'll be somewhere between $200 and $300 positive. But the positive cash flow is really not what we're necessarily really diving in on. It's really this equity growth. And so you were talking about how people put their money in the stock market, and of course, why would I put it in real estate? It's a hassle, this and that, and where's my return? And here's an example. This is basically just the cost, your cost going into it, and your loan balance being dropping as just a normal amortization, and then a 5% appreciation rate, which is the historical average over the last 50 years in Texas. You could play with this spreadsheet. You can put a 2%, 3%, or 7%, whatever. But what you'll see here is with your initial investment, this doesn't count any positive cash flow. But with your initial investment, if you just the value going up and the loan going down within 4 years, you're at 113% original return, 145% return after 5 years. That's a no-brainer. I mean, really. I mean, most of our clients are between a 5 and 7 year hold, or 5 and 10 year hold, with seven being the average. And then what they'll do is they'll 1031 and buy three more. They'll take this equity and roll it over to three more. So one property ends up buying three, wait a few more years, and then three properties they 1031 and buy nine. So I mean it's just simple math, really. Let me get back into the inventory sheet. So actually, I'm going to go to more of a broader stroke here. So we're focusing on San Antonio and Austin. Austin, we don't really have great opportunities in Austin because the prices are too high and the rents aren't high enough. So similar to your area in Frisco.
Yeah.
You're going to go negative, and I don't like writing checks every month. So
Okay.
we not that we don't buy in Austin, we just buy it for different reasons. But our area is, let me get into a regular map here, make it so it's easier to see. We talked about this a few minutes ago, which is where we buy, where we don't buy. And just kind of a little bit of an overlay here. Austin's the 10th, now 11th largest city in the nation. And then San Antonio is the seventh largest city in the nation. So between the two cities, it's going to become like a Dallas Fort Worth here someday, not too far in the distant future. You can see Dallas combined with Fort Worth. That's what's happening to Austin and San Antonio. And in between is where we're focusing on, because this is the biggest area of growth, and it's also area that has the prices that are half of what they are in Austin. Um, we focus on west side of San Antonio. We're talking about some of your friends might have bought already in Landon Ridge, and we were kind of talking.
Several people bought it in London Ridge.
Yeah, so Landon Ridge, I've been through that subdivision, same floor plans that we're choosing from, same, we got the five or six that we choose from. And we were, I was there. What I like about it is that there's a brand new HEB grocery store around the corner, lots of infrastructure coming in, good schools. But there's several others in this area too, that I also target. And the reason is maybe they have a lower tax rate, and that's kind of the consideration that we were talking about earlier. Is where do we throw the dart? We like West San Antonio, Northwest San Antonio, some of the stuff in the south. Not really big on the east side of Metro, but once you get outside of 1604 road here, Randolph Air Force Base, this is the international airport, the medical center. These are all like 20, this is all like within 20 minutes, this whole region here. So you could be, if you live here, you can be in San Antonio on the airplane and at the airport in a half an hour. But New Braunfels is the fourth fastest growing city in the nation, behind Georgetown, where I live. And it's super scenic area. It's a resort area. It's on I-35. It's not off the beaten path. And this is an area that we focus on. But even in this area, there's lots to choose from. So the idea here is, even with Lennar Homes, is where do we throw the dart and who do we work with? And so the things is that on the if you go to Lennar's website and start poking around, which we can, they're going to you're going to have a little pop-up that says, please chat with or contact us. You're going to be talking to an internet sales agent who's going to assign you to a random agent with Lennar who doesn't know me or doesn't know our system, doesn't know our property managers, doesn't know all the people involved in all of the trades that we have. And so that's the whole point, is we stick with one on-site agent. So because she knows, and we've sold over 100 homes together. She knows what our clients want. She knows their mentality. She understands the numbers. Whereas a lot of these, there's nearly 100 Lennar agents working all these subdivisions. You don't want to talk to some random agent that doesn't know investment property. That's not their area of expertise. So that's why we encourage you to definitely connect with us and our team. Doesn't cost you any more, doesn't cost you any less. So go with the experience and the network that we have, plus the leasing power behind it. But look at all these subdivisions. Well, which one do I choose from, right? Like,
So many.
yeah, yeah. So I won't go into these details because we've already made that. We've already come up with what we feel is the best target markets, and now we're going to get into the real nuts and bolts of this whole fiscal closeout stuff that works so well. This really worked well. So Lennar's San Antonio subdivision areas, their list of homes that we would choose from has shrunk from 2 pages down to about 1.5, or even less than 1 page. They are blowing through their inventory. And so once the inventory is gone, May 30th, remember, is their fiscal closeout, right? So let's take a look here. And you'll notice here can you see that, Ram?
Yeah, I can see it.
Okay. Um, you get these are the ones that we're in between the 1,300 square foot and the 1,800 square foot price range, right? But what we have here is, you see stages here. This is the stage of completion.
Hmm.
And the homes that are going to be able to be completed by the end of May start to get the largest discounts. You can see this one, even though this is a May closing, I don't know why it's priced so much higher, but like I said, it's an algorithm. Management, I don't know what they're doing. I mean, why would I buy this one that's 1,400 square foot that closes before the end of May for 237 when I can get a 1,402 for 213? So this is what we're watching every day. These sheets I have a VIP list of about 70 active investors, and I send this list out to them every day, especially the ones that are pre-qualified, because this is what they're watching. And you'll see all of a sudden this number will go up to 47,000. And this will drop by another, depending on how far along the property is. This is not something you'll find on the internet. This is something that Kimberly put together for me. And she sends it out to me every day. We have the important information for our proformas, which is the tax rate, the HOA, the zip code, which is important. You can check out and then the schools. Northside ISD, big deal. We're not 100% concerned with schools because this is entry level housing, but good solid schools is definitely a concern for parents. Landon Ridge, there's a screaming deal right here. I thought 209,000 and for a $45,000 discount. I can close in a couple weeks. We're usually closing these things within three weeks to a month, especially with fiscal happening. Um, but they also have a higher tax rate. So that's another thing that we look at, 2.38, whereas one of our subdivisions I'm going to show you has a 1.42. The difference between is almost a full percent in tax rate. And at a $240,000 property, that's $200 a month more in taxes you're going to pay for the same sales price. So just keep that in mind. If you can get higher rents to offset that, that's just one of the considerations is the and the biggest one of the bigger considerations for investors in Texas is the high property taxes. You can also see some of these that don't have much discount at all. And then once again, as they get further along, the discounts get deeper. This is interesting house, 1483 for 206. So looking at school district, tax rate, HOAs, and then location, obviously. And then we go back to, now this is New Braunfels area, and these are our cherry picked areas that we look at. Water's Edge, not as big on it. I like Voss Farms if you can get a good deal. Starting to get some good deals coming in here. 209 for a 1402 square foot. This is like 12 minutes to downtown New Braunfels. I have lots of what I usually do after a conversation like this, I'll usually get with your clients or maybe a group of them on a Zoom, and then we'll go nuts and bolts and we'll go into these neighborhoods on the internet and on Google Earth and make sure that you kind of get the lay of the land. But I don't want to do that with everybody's time is valuable. We can do that on another follow-up call.
Yeah.
I like Parkside a lot. This is very well proven subdivision, decent tax rate, good HOA. We leased back in November. We had 6 houses in this area. I'm like, oh wow, 6 closings, great, but now I have 6 vacancies. We got all 6 leased by the end of the year. Actually, did 12 leases within 60 days through our leasing marketing. And then Navarro Ranch also good. So we know each one of these. We're in these every week. We're physically walking these subdivisions, going back into see the discounts. As the house gets closer to level 13, the discounts get higher and higher. This is a $42,000 discount off of retail price, a 1,600 square foot 4 bedroom 2 bath. So these are the kinds of with a 1.462 tax rate. These are the things that we, performa geeks, crunching the numbers. This is where we're at to make sure that, and which ones are the best performers. I always ask my leasing agents, which ones are flying off the shelf? What do people want? And that's kind of what we tailor it to. There's new subdivisions coming up too that are very attractive. Don't want to go into it right now for sake of time. I'd be glad to go in detail with anybody that would like to connect with us, get on a call, get on a Zoom, or even come down here. I know you have a bunch of people, Ram, up in the Dallas area,
Yes, we do.
and we were just talking about if they want to make a caravan or we'll hire a limo bus, we can make a day or a weekend of it, and we can tour all these. And I've done that many times, and it's a lot of fun actually. And it's only 3 hours. Dallas is only 3 hours from here. So that's kind of in a nutshell. It's a lot of information to cover, but this is where the opportunity is, and what I really encourage. Let me go ahead and get back out of stop sharing here. What I encourage is that you don't try to do this alone. You've got Ron with 18 years of experience, me with 42 years of experience. I couldn't do that many sales without having all the network of people of help, network of help in place, including property. We have three different property managers. We have six different leasing agents. We've got our own property management company. The leasing is something that we pride ourselves on because the number one concern is vacancy. So that we address head on because if they have a good experience, they're gonna come back and buy more. They don't want to be in a bad area. That's what we just covered. Do we want to go with 40 different subdivisions? Which ones to choose from? Which ones don't work, or which ones would you want to stay away from because of the neighborhood's not gonna, it's a sketchy area, right? Then who do you trust? So, I have an accountability to Rom to make sure that his clients are happy. I have accountability to my clients, your clients, to make sure that they stay well taken care of. And we also talked about what happens after closing, and if there's problems, am I going to be here? And I just showed him, 20 emails from somebody who's having a problem. One of my clients is having a problem with an HOA. Their bills weren't collected on time and so I'm in there rolling up my sleeves and trying to figure out what went wrong. So I'm in it for the long haul, and I'm really want to help our clients. Also, I'm really big on the education piece of it because an educated investor is a much less stressed investor. So we could go at a lot of different things, about the tax, about legacy, about stepped up bases, about the benefits of depreciation and all that kind of stuff. But I rather just this is about relationships, and Rom's trusting me to build a relationship with his clients. So that's really important to me, and trust is a big word for me.
Same
And
here. Yeah.
so I want to offer my services, and also prevent you from the pitfalls of making wrong decisions or buying in wrong areas for the wrong reasons. And because I care, I'm in this business, and I'm now helping other agents across the nation. Whether they're investing with me or investing in other states, it's okay. I mean, the bottom line is real estate investing is fun. It's over the long haul. It's been super good for our family, and if I didn't put my money in real estate, I'd end up spending it. So, and now, could put it in the stock market, but I always tell people if I tell you I'm going to the stock market, it's time to get out. It's like when I bought Dell stock way too long ago, it tanked, so don't listen to me about stocks. You guys got your stocks. So I'll stick with real estate for now. So, Ram, do you have any questions? I know you did.
Nice. You covered, pretty much everything that my clients would ask. Mainly, investing is one thing, but investing into the right property in the right place, right time is also everything. And you have experience. I have experience. We both can, help the clients. It's like, long-term clients, and they will be, forever clients if we help
Yeah.
them, in a way that you explained. And, that's our goal here,
Yeah.
So, it's not like investing, in the area that you don't know. You are going with the, experienced team of people, helping you to go through this journey, to make money,
Well, you,
obviously.
you mentioned that's another thing about you've been at your clients ask you, where can I buy? And you're saying, well, you can buy a 500,000 $500,000, 1,700 square foot house built like 30 years ago way outside of Frisco,
Yeah.
that doesn't cash flow. And why would I do that? Right. Or I can buy multiple properties that are half that price that are already cash flow positive so we usually is putting 25% down or more, and then 5.25% interest rate. And that really makes a lot of sense. So like I said, you don't have to invest in the area that you live in. Because a lot of times, like I'm not investing in Austin right now. I own a bunch of property in Austin, but I bought it when the prices were right. Right now, I'm waiting to see. I don't, it's there's I'd much rather buy in a lower priced area that has room to go up.
Yeah. Yeah.
This is a long-term play. They're not going to be able to sell it in 2 years and make, a windfall, but I call it getting rich consistently, not getting rich quick, getting rich consistently. And so I know
That's the main thing. A lot of people ask, oh, so I can invest in stock market and make more money, so everybody has their own ways, but this is like, diversifying their portfolio, investing in long term, consistent returns.
One of the things about stocks, and I'm not expert at it, and I'm not a tax expert, but I know that if you sell your stocks, don't you have to pay gain on it,
Of course they
right?
do. And
So if
a very high chances that it can become zero too, in some markets.
yeah, oh, that too. So well, heck, and we saw the swings of up to 20% this last week.
Yeah,
Tesla at 40%. I mean, real
40%.
estate doesn't do that. If you were getting ready to retire, that's the big thing. All the 401k people ready to retire, like on, I was like, but stocks do this, and they've notorious now they've gone up like this, but we haven't seen this in a long time.
Yeah.
And uncertainty is not good for the investor market. And so, this is giving a little bit of security, a little bit of diversification from the stocks. And then when you don't have to sell it, when you make a big profit on rental property, you don't have to sell it and pay the taxes. You can defer it into more property, and that's how people get rich in real estate. They exchange to more property using tax deferred money. And here's the really kicker for legacy, because we're all about saving, having a legacy for our kids and our children's children, right?
Yep.
And so is that when we pass our big estate of real estate, our kids will get a stepped up basis. So they won't, the day I go to the pearly gates, they'll get the basis of the property will stepped up. Say I have $10 million worth of property, and but I started, it went from 2 million to 10 million, which is not unreasonable. $10 million in appreciated property, I would have to pay millions of dollars in taxes if I sold it the day before I passed. If I bequeath it to my kids, everything gets, as long as the laws stay the same, everything gets stepped up to 10 million. They could sell it the day after and not pay anything, and then the taxes that I would have paid. And the other thing is cool, the depreciation of 27 and a half years starts all over again once I pass. So my kids are going to appreciate it one day. So, but that's what it's all about, is making their life a little easier, and getting it. It's really my 14-year-old. She's like, Dad, I want to get into real estate. I'm like, you kidding, really? So yes, yeah. So anyway, she goes, yeah, I like it. I'm like, great. So I have the next generation of real estate investors.
Yeah.
So thanks, Ram. Hey, just put
Thank
out
you,
your
Ken.
phone
This is
number.
really exciting.
Yeah, put your phone number out, Ram, and just so in case somebody that doesn't know you is watching this, and maybe your contact information, I'll do the same.
Yeah, yeah. I live in Frisco, Dallas area. Service Frisco, Plano, Prosper, Salina area mainly. My number here is 913-375-0510. I put in the chat also.
Cool. I
Yeah.
don't know if it'll show up on the video. Hey, there it is.
Yeah, I don't know. It might, but
That's all right.
yeah.
They got it, and they know how to get a hold of you.
So
You've got a very cool name. I mean, it's easy, and mine's very unique too. Kenn with two N's, Renner, but mine's Kenn Kenn at buyaustin.com. That's my email, and then my phone number is 512-423-5626. So I look forward to talking to your clients and helping them out. And I'm always available to answer questions. Best way is text me or set an appointment with my call scheduler, and let's get on the road to start with one, maybe go to 10. What is the goal? 20. I was talking to Ram. My goal is 42, and so I'm about a third of the way there. So, but it's great talking with you. Can't wait to get with your friends, and also potentially doing a little bit of a tour down here, maybe even a bus, and to make a weekend out of it.
definitely. Thank you so much.
Thanks, Ram. Talk to you soon. I'll send this over to you. Appreciate you.
Thank you.